Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO of Inc. Research. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF. A 2017 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Suncor says Canada is not a friendly place to invest. Would you agree with that statement?
Well, I haven't seen that particular quote from Suncor. They're operating in the energy patch, so I could understand anybody in the oil patch being more than just a little frustrated with the policy in Canada. So from there, anyone in the oil patch, is quite justified to feel that way, and we just have to hope that our policymakers in Ottawa, in particular, get the signal. It's not the right way to run a country, Jim, when we're importing expensive oil from Saudi Arabia to feed Eastern Canada, and we're selling our oil that we produce in Western Canada at a discount to the Americans. I mean, that is just bad business. So, this is incumbent upon Ottawa to show some leadership to fix this.
Well, shouldn't they be pushing for a pipeline from the west to the east so they don't have to use Arab oil?
Well, they didn't Justin Trudeau did not spend any political capital to get that one done. And he seems reluctant to spend much political capital on the Trans Mountain, but he's going to have to spend a bit more here to get it done. He's kind of gone into hiding again on this issue. I don't know if he thinks it's just going to solve itself, but it's not going to solve itself. So this is make it or break it time for the federal government, and they've got to restore confidence in terms of the private sector's view on Canada being a competitive place to invest. But look, they've got a lot to work with. As we've talked about on the show many times, there's a lot of positives that the Canadian market has to offer. The energy sector is just not, a standout example of us doing things right. We've really dropped the ball on that, and Ottawa has to take the bulk of the blame.
Amazon plans to build a high-tech center in Vancouver in the old post office building downtown. Is that going to be a big boom for the city when it comes to high-tech? Because it doesn't look like it's just going to be a warehouse where you're shuffling parcels around, but they actually plan to be doing high-tech development and hiring anywhere from 3,000 to 5,000 people over the next 3 years.
So look, Jeff Bezos and Amazon, they didn't get to where they are by being dumb. I mean, they've identified Vancouver as being a bargain when it comes to highly skilled people. And, we've talked about this on the show before many times, that Canada's workforce, that is our number one strength. And seeing Amazon swoop in to, basically take advantage of labor that's on sale in Vancouver, is a smart move from their perspective. Now, unfortunately, for other tech companies in the city, that's probably going to hurt them. But, that's a free enterprise, and, of all the things I'm concerned about Amazon doing, coming in and pushing up the wages of tech workers by competing for them, that's one of the better things that they're doing, I would say. There's a lot of good things they're doing, but there's also some problems with their power now. They're so strong that they really do have a dominant position in so many markets and have squeezed a lot of companies out of business. But look, when it comes to the labor market, they're going to they're going to give it a nice shot in the arm here. I just hope, though, that they don't crowd out so many firms that they become the dominant force in the labor market, because then they'll set the wage rates in the city. So, the initial bump will be nice, but let's hope it's balanced. Let's hope that Amazon is one of many larger companies that compete for homegrown talent here, and they don't become the number one employer.
We'll have more with Ted Dixon right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features to our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Ted Dixon. Ted, speaking of high tech, the head of Tesla, Elon Musk, got very testy when he started getting tough questions about the viability of his company's stock. And he says, if you don't like its volatility, then don't buy it. But he was really, is Tesla a good deal right now, or is it in danger of collapsing?
Well, Tesla's benefited the stock price from the large amounts of capital that have moved into the United States. So in one sense, I think, Tesla, you could say, is overvalued just on that basis alone. Never mind any of those other issues. There was so much money, speculative money, moved into the stock. I mean, we have it in a category based off of our IncEdge rankings, which look at valuations, insider commitment, and price momentum. The insider commitment is very strong in the company. There's been a little bit of selling, but because Elon Musk owns so much, it does very well in that. But unfortunately, its valuations are way high, are very expensive, and the stock's lost some price momentum. So we actually have it in the bottom 30% of the stocks ranked on our, that's not a stock recommendation. It's just telling you where it ranks in our, in the pecking order. So it wouldn't be one of the stocks that we'd be looking at going forward in the U.S. market. In fact, what we're seeing, Jim, is a tilt in general to deep cyclical resource-based stocks, and that means stocks that you find in Canada typically. And Canadians won't believe this, and that's why it's probably still a good time, to think about increasing your exposure to Canadian stocks. But they're actually outperforming American stocks recently. In fact, our index, our mid-cap oriented, as you mentioned on the intro, in Canadian Insider Index, when you include currency, as of the end of April, it had actually outperformed the S&P 500. So from a Canadian investor's perspective, that index actually has outperformed the S&P. You've got now even the TSX composite, starting to make some gains against the S&P 500. So there's a rotation going on. It's not getting a lot of rotation leadership. It's not getting a lot of attention in the media. Well, that's when investors should be looking, for opportunities. And if you've made some money in U.S. tech stocks, and you haven't, you've dismissed the Canadian market because, it's just full of miners and oil companies. Well, maybe those miners and oil company stocks and mining stocks, maybe they're going to have their day, which is usually the case towards the end of a economic expansion. We've been in this in the United States, the economic expansion, year 9. If it's a baseball game, ninth inning, you're pretty much near the end. I think this is going to go into X ratings, this expansion, just because of all the stimulus that the central banks threw at the beginning. It's going to take a while to kind of wind that down. But typically, Canadian stocks do very well at the end of that cycle, and that's probably where we're at right now.
The U.S. Fed did not hike rates at their last meeting. The Bank of Canada did not hike their rates at their last meeting. Europe didn't hike their rates. Do they think that if they do hike rates again, it could have a bad effect on the economy?
Well, I think in general, they're so worried about getting back to where we were in 2008 and 2009. They're really going to really take their time. And of course, in Canada, we have our own special case where we had a central bank that threw fuel on the fire back in 2015 and encouraged people to take on more debt, which was a really dumb move, and I think it's going to go down in history as a dumb move, those rate cuts in 2015. And now, we have the central bank in Canada saying, oh, now we have to worry about too much debt. Well, hello. You didn't seem concerned about that in 2015, Mr. Polos. Why? It's taken you this long to figure that out now? And there they were this week, Jim, talking about how they have new models that they've done in Ottawa to monitor things. Well, here's a suggestion for everyone at the Bank of Canada. Maybe put down your models for a little bit and go down and take the train to Montreal or, however you want to go, and to see what's going on in the condo market there. I mean, I just got back from Montreal on a business trip, and condomania is taken off in that city. You've got, for someone in Vancouver, the stories such as a condo development selling out in 24 hours, probably wouldn't raise any eyebrows. But in Montreal, they're not used to that, and that's what's happening. So Mr. Polos, he wasn't able to accomplish, a mess in the Montreal real estate market yet. Well, he's got time. He can drag his feet on more rate hikes, and we can see what happens in the Montreal real estate market. We've had disasters in Toronto. We've had everyone knows what's happened in Vancouver, and that's not all the Bank of Canada's fault, but they've played at least a supporting role, if not a leading role in that. Yet, they've got new models, Jim. So I'll just have to wait and see how those models help them make their decisions. But they should just get out on the street and take a look around and meet with people and maybe spend a little less time tinkering on their computers.
Well, of course, the Bank of Canada didn't raise their central rate, but all the major banks in Canada have upped their mortgage rates to over 5% now.
Well, this is the other aspect that the central bank, if they haven't figured it out yet, will soon learn, is that they don't control all the rates. They control the overnight administered rate, basically, and that's it. And if the bond market is going to sell off because it wants a higher return on riskier investments, and the higher and higher real estate prices go, the more risky it becomes for a new dollar to go in, because the chances of a correction just become higher and higher. So we're going to see continued pressure on private rates, for the foreseeable future. But we're still in a manageable situation, I think, in Canada. We're nowhere near a crisis, and the central bank is just really going to have to try and wiggle its way out of this corner that they've boxed themselves in by cutting rates too aggressively when they didn't have to, and now they've got a problem because there's too much debt in the economy. So, I don't have a lot of sympathy for their situation, and now they really have to deliver for Canadians to get us out of this. And unfortunately, I think they're going to drag their feet on rate hikes, in that it's going to put downward pressure on the Canadian dollar, upward pressure on inflation. So who's going to pay the price for that? Well, the poorest in Canada. So it's really been a major serial policy failures from Stephen Polos and the Bank of Canada. And the sooner we get a new central bank leadership in this country, the better off we'll be.
We'll have more with Ted Dixon right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap, with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, getting back to the banks for a second, if they're charging over 5% for mortgages, how come they're not paying us 3% for our savings?
Well, that's a good question. You'll have to ask your teller the next time they try and sell you an RSP or something. So, I think in many cases, banks look at their loan portfolios and they make adjustments. So, while and I'm not a rate specialist, but they may be putting up rates in one area and leaving them, or even adjusting them lower in another. It's hard to say. But look, Jim, in real estate, generally the banking system has a lot of exposure to real estate in Canada. So to see them putting up some rates in that sector does not surprise me.
And obviously they think people can afford it.
Well, maybe they feel that they have enough real estate business on their books and that they can afford to turn down some business.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Any questions for our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.